Our next presenter is Everett Knight from the Matco Cannabis Fund. Got really excited about the fund after attending a lunch that Everett spoke at because when you hear him speak and when you hear him sort of get into the details of the industry, you really appreciate how much he actually knows about this industry and the depth of his knowledge, even though he says he's not a user. Everett is a portfolio manager at Matco Financial. It's a Calgary-based independent private investment management firm that serves individuals, families, business owners, trusts, and foundations. Everett's got a lot of experience analyzing and investing in small cap companies. For the last 5 years, he ran the Matco Small Cap Fund. He started analyzing and investing in the cannabis sector in 2014, so as Michael alluded to, quite early in the space. And over the past 3 years, he's accumulated a thorough understanding of the industry, regulations, subsectors, and the companies involved in the fast-growing space. He's currently a portfolio manager on the Matco Cannabis Investment Fund, which is focused on investing in private and public companies in the cannabis sector. I find this an interesting thing. In his spare time, Everett enjoys traveling to Vancouver to enjoy the beautiful city, which, you know, Vancouver. Anyway, here's Everett Knight.
I also don't mind coming to Toronto either. So my name is Everett Knight. I'm lead portfolio manager on the Matco Cannabis Investment Fund. Matco Financial is based out of Calgary. Don't hold it against us. We are, just to kind of give you an introduction to Matco Financial, or else my president wouldn't allow me to speak here. Matco Financial, we're based in Calgary, Alberta. We manage about $550 million. And what we kind of specialize in is lower volatility investments. And we have 5 prospectus qualified mutual funds. And the next question I always get asked is, if you're in lower volatility, how the heck did you get in the cannabis space? And it was really a stumble for us. You said that we started 4 years ago, but it was in 2014 we kind of started the space coming to be, and I was a small cap analyst at the time. And what we couldn't find in Canada is a lot of growth. We had trouble finding growth in Canada. And one of the areas we saw this in was cannabis, albeit it was early on. There was growing revenues, but little of them. There was negative cash flow, and there was some patient growth. But what we did see is that you see what's happening in the U.S. with legalization in states. You see social acceptance being higher than ever, and then you see where the Liberals were going. So what we did as a firm, we kind of said, okay, let's take some time to actually understand that space. And you fast forward to today, and now I've toured almost 32 facilities across Canada and been modeling the space for over 3 years. And what we really tried to do in this space is create a lower volatility fund in a high volatile space. And that's what we kind of specialize in at Matco. So that's kind of how we stumbled on the space. So kind of to continue that journey and to get into the investment thesis, because we're talking about investing in the space this morning. So we actually didn't start investing in it right away. So we analyzed it. We ended up being one of the first mutual funds in our small cap fund to get involved. We actually had to limit our weight to 5% since we're a low volatility investment manager. So our clients kind of came to us after that, and they said, we want more exposure. And so we ended up opening a segregated account at Matco that we've run all public securities. Actually, in the last 6 months, we've almost tripled the HMMJ, the ETF in the space. So we've kind of developed a core competency that way. But what we saw is to get into the diversification of the industry, and it was talked about today, the ancillary businesses like Lyft, and I know Mark Wayne's going to come out and talk about Canopy Health Innovations. But there's a whole bunch of diversification, and to get access to that, I think you need to go in the private market. So we launched this fund so that we could have access up to 50% in privates and still have public access for the rest of the portfolio. So if you look at the journey in that chart, we originally thought this was a 7-year industry, and we think we're entering the second inning of that industry. But if you look at what's happened in this industry, even this year or last year with Constellation Brands, the Corona brewer entering the industry, has everyone heard of that? So they invested $245 million Canadian in Canopy growth. And what that does is we never thought that would happen before the U.S. actually legalized it. We thought it was 5 to 7 years down the road. But you have these companies that are losing market share, like Constellations, in these recreational legalized states in the U.S. So there's 9 recreational legalized states for cannabis. And in some of those cities, they're losing up to 15% in their beer sales. So what are these companies? They're already coming into the space. So actually, we thought this was a 7-year. It's more probably like 3 to 5 years is going to see the biggest growth rate. But we do think we're entering the second inning. So I wanted to give a history. I think investing in the space, it's important to understand where we came from, and then I'll talk about where we're going. We've really been in prohibition as a worldwide global economy for cannabis, but one of the few places that actually had studies in cannabis and is still studying cannabis is Israel. So in the 1990s, our patients kind of put up our hands and were like, okay, we want access to what these anecdotal and observational studies that are coming out of Israel. So our patients were like, we want access to that to help our illnesses. So in 2001, we legalized medicinal cannabis. And what you don't know is between 2001 and 2013, we had one government-run licensed producer that ran the entire space. And if you look at the universities in Canada studying cannabis, you could count them on one hand, all the universities studying cannabis in Canada. Now in 2013, what happened when this place was privatized, and you have companies like Tweed that's turned into Canopy Growth today, well, you've had a whole bunch of investment in the space, and there's been more research studies. And if you look at around Canada today, almost every university is involved in a cannabis study, or they're trying to put it through their ethics board. You can talk to the researchers at those different universities. So 2013, we now have 101 licensed producers today. So just between 2013 and today, 101 licensed producers. And when we really view the industry going from more of a speculative industry to non-speculative was back in 2016 when the ACMPR, actually the framework emerged, and we have the licensed producers we have today. So that's kind of when we got involved, and we do view this as a very real industry that everyone needs to be aware of. So I wanted to touch on recreational. It's coming close. Obviously, the Senate reading, the second Senate reading was recently here, and it's topical. But this is kind of the road we've been on. And what I will say, it's gone a lot quicker than we expected. We expect it to be delayed, and we do still expect it to be delayed. But we do think it's a reality that everyone has to deal with. If you look at what's happening right now, it's through the second reading in the Senate. They're in the committee stage. We have 5 committees actually looking at this bill. An ordinary bill takes 1. So what are we expecting? We're expecting a lot of amendments. If you're reading the minutes in these meetings, there's going to be a lot of amendments in there. And I think that it's going to be blown up in the media. You got to be aware of that in the space. I think it's a volatile space. But what I will say is that I think it is happening. There will be a vote on June 7th. And if you look at the breakdown of the actual Senate itself, 55% were nominated by Liberals. So it has a large independent body, but if you look at where it's coming from, it's still very much a Liberal-nominated Senate. And I think that's something to be aware of. I think from expectations, I don't think the Liberals hit their July 1st date. They've even Justin Trudeau's kind of come out and been like, okay, summer 2018. I think it's probably more like fall 2018. I think they're probably you're going to expect online sales before the actual rollout of these provincial government stores. I think that rollout's going to take longer than people think, and you're looking at a later 2018. So just as an investor, you have to have that as your expectation. So like I said, we have 101 licensed producers today. So this chart, I always say, take a good look at it because I think there's only going to be 25 in 5 years. And I think it's through industry consolidation and people failing. Like any industry, you have leaders emerge and you need a cost of capital. And I think those leaders are already emerging. And if you look at the one thing I'll kind of point out here is in the bottom middle side, 22 companies have oil sales license. So I don't know about you, but I don't know any doctor that wants you to smoke cannabis. They usually want you, it wants to be in oil. They don't want you smoking it, and I'll kind of talk about how oil's emerged, but there's only 22 companies today that can actually sell oil. And so oil actually sells for $13 a gram or $12 to $13 a gram, where dried cannabis sells for $6 to $7. So you gotta get an idea that it's higher margin business, but there's only 22 players, and it's something to be aware of. So this is the journey we're on. This is patient growth in Canada. And if you look at it, it's almost been 10% compounded monthly patient growth. And if you look in 2016, the beginning of 2016, we had 40,000 patients. Well, if you look at where we are today, Health Canada just announced that December number. It was actually higher than my estimate. It was 269,000 1,000 patients. So you can see how fast we've grown. And the one thing I will point out, in 2016 is the first time we started offering oils, at the beginning of 2016. So the active doctors over that time frame almost doubled in 2016 because what did they have? They had oils to prescribe. They don't want people smoking it. And we actually have other forms today, like capsules, and some of the leaders in that are in the room today. So why are these patients actually getting cannabis, and why are these doctors prescribing it? Well, we're on this journey where it's been prohibition. We have a lot of observational or anecdotal evidence that shows it helps. We have children that have epilepsy that have 150 seizures a day, and then they take cannabis and go to 4 seizures in a year. That's a real observation. But what we don't have is the studies behind them. And the journey we're on is really putting these studies to paper and actually doing these phase 2, 3, 4 clinical trials to get there and prove this out. But whether it's pain, MS, Parkinson's, there's a wide range of studies. And this is why all the universities are getting involved in it, because it's such an opportunity, because it shows that it does help from an observational standpoint. And now we're just putting the research behind it. So I wanted to touch on opioids. We have an opioid epidemic here in Canada and in the U.S. 6 to 7 Canadians die every single day from opioid overdoses. And this pain market is a very real market, and cannabis is taking market share from it today. If you look at there's 29 legalized medicinal cannabis states in the U.S. So it's still federally legal, but there's 29 with medically legal cannabis states. And if you look at those states, we see that some of them actually have 23% lower opioid hospitalization rates, 23% in those medicinal cannabis states compared to the ones that do not. That's a big stat. You can already see that opioids are taking cannabis is taking market share from opioids today. And if you look at 2015, 33,000 deaths in the U.S. from opioid overdoses. In 2015. There's been 0 ever recorded deaths from cannabis use, and it comes back to a physiological response. And opioid receptors control your breathing, where cannabinoid receptors do not. Something to think about. So as an investor in the space, you really have to believe in this chart. And this is the journey we're on, with valuations being where they are. And Michael came up and talked about market capitalization. This is the journey. So we have $500 million in trailing revenues today. And we think we're going to over $16 billion. And if you look at Deloitte, they think we're going over $23 billion. So I'm going to walk you through the assumptions. $16 billion sounds like a large number. I think I'm very conservative, especially if you look at some of the other analysts in the space, and I think that's a good thing, because I'd rather mark my numbers up than down, but I think it's important you understand the assumptions and believe in them. So the bottom line is medical. We think that's a $3 billion market, a little more consistent, but a smaller market for now, and we're not baking in any opioids or studies coming in. And then you look at recreational market, a $5 billion, that's the green market. And then finally, it's this yellow market that I don't think people are talking about enough, and it's companies like Lyft and Matco that are ancillary businesses within this industry. And the reason we created this fund is to actually gain access to that part of the industry, because we think it's where the opportunity is. Whether it's we have testing companies here today that actually test for pesticides in the cannabis and test for cannabinoid content. Whether it's the distribution retail companies that are actually selling the cannabis. This industry is so diverse, just like anything, and we want to invest in the picks and shovels of the cannabis industry. And if you look at how big that market is, it's just as big as the other two. So how do we get to these estimates? So if you look at the medicinal market in the States, 1.7% to 2% of the population uses medicinal cannabis today in these more sophisticated medical markets. So if we say 2% of Canadians, 36 million people, we almost get 800,000 people. If we just take 800,000 people and times it by the current usage rates today, we get almost a $3 billion market. So we're not taking any new studies, we're not taking opioids, we're not taking any of that. We're just trying to be conservative here, but that is the potential. So 800,000 people, we're currently at 269,000 today. The U.S. is a great roadmap for recreational as well. You can do this many ways, but I think this is the best. And you can kind of get an example for any different recreational state. But I've highlighted Colorado because it's kind of one of the more extremes. But they have 5.5 million people as a population in Colorado. We're 6.5 times bigger. Well, they did over $1 billion in sales in 2017 in recreational cannabis. So if you just times that by 6.5 and you put it into Canadian terms, you get just over a $9 billion market. So we're baking in 5. Like if you look back to this chart, we're saying 5 billion. And the reason is because Colorado has edibles, vaporizers, and what we're doing here in Canada is you can expect that within a year after legalization, they're going to put in framework, but we don't know what that looks like. And I think we should be conservative with our estimates because they have had problems rolling out that too quickly. I think it does come. They have said they're going to do it within a year, but again, just to be conservative, not 9 billion, we're going 5 billion. And then finally, it's ancillary businesses. So if you look at this market today, if you look at the International Monetary Fund, they said that the retail industry, okay, you have a retail industry, the actual supporting industry, the ancillary businesses, are 1 to 2.5 times bigger than that retail industry. So if we just take 1 times, that's an $8 billion market in Canada. And Deloitte would think we would be conservative there. So I wanted to, before I get into what we're doing in this space, this is a global movement, and we currently have 3 years on any other country if we don't screw it up. and I mean that honestly because we've screwed up a lot of industries in Canada from an investment standpoint. I'm a small cap guy, but we do have an advantage here. And if you look at this, we think this is a $180 billion global annual marketplace. And how we get to that? Same mythology, right? If you just look at 2% of the most likely countries in the world that are going to legalize cannabis, you get a $180 billion market at the current consumption today. So we're, again, not trying to increase that, but that's a large market. And if you look at that, there's 23 countries today with active medicinal cannabis laws. 5 happened in the last year. We expect 20 to 25 within the next 2. So just like we did in the 1990s, put up our hand, our patients were like, we want access to that. Well, they're seeing what's happened now, and every country is kind of like, now, okay, we want what Canada's doing. And Canada's really a leader there. And everyone always asks me, when is Canada going to be a leader? Well, we are today. And if you look, these are companies that have global relationships today that are trading on the Toronto Stock Exchange, actually operating in legal markets. And if you look at even Aurora, so Aurora, for example, I'll highlight them because they've had one of the largest, I would say, global revenue shares. But in their last quarter, they had $2.5 million coming from Germany in 1 quarter. And Germany went from 500 patients to 13,000 patients, 500 patients at the beginning of 2017 to 13,000 patients at the end of 2017. So it is 4 years behind us. It has a lot of growth ahead of it. It's going to be slow, and there will be an inflection point, but it will get there. And insurance actually covers it in Germany, which is a lot different than in Canada. And that's almost, it's double the population here in Canada. So it's a way bigger market, but something to think about today. So I think this is just the beginning for mega caps in this industry coming in. Whether it's pharmaceutical, you're seeing pharmaceutical relationships develop today. We had tobacco just come in a month ago and buy 2 pre-licensed producers, and then you had Constellation Brands. And I can tell you right now that all these alcohol companies are circling this space. And since it is illegal in the US, where are they going to base and where are they going to get their expertise? What's happening in Canada today, and this is just the beginning. And if you look at Constellation Brands, $245 million is 0.5% of their market cap. 0.5%. They're up 1% that day when they announced that they put it into Canopy. So you can see that these are large companies, that these are small tickets for them. So what are we doing? We really wanted to take this lower volatility and put it into a high volatile space. And how we're doing that is trying to offer diversification. And that's the reason we have up to 50% privates, is because we want to do that. And if you look at kind of this slide, this is probably the most important slide, because most of our clients are invested in the top 2 cultivation companies. And they're great companies, and they're leading it for Canada. But I think there's so much more to the cannabis space than just the cultivation that everyone kind of hears about in the news today. Whether it's testing companies, I'll take a testing company for example. We've closed on 2 testing companies in our portfolio so far. Testing market today is, Health Canada has mandated independent testing. So everyone has to get independent testing, especially if you're exporting to Germany. Everyone wants to know where it's coming from, or what pesticide use, what's the cannabinoid content. And these are companies that are currently testing cannabis, that if you look at, if the cannabis market's going to grow and volumes are going to grow with recreational coming online and medicinal patients, well, then they're going to test more products. And they're going to grow just as fast as the overall market is growing, but no one's really talking about that today. If you look at even distribution retail, if we don't have private distribution here, personally, I don't know how the analysts get $4 billion for the first year for the cannabis market when you only have 40 stores for 38% of the population here in Ontario. I think some people are being a little too optimistic, but there are opportunities within that retail space for private opportunity. Alberta is probably one of the main places, and Saskatchewan we're looking at. BC has a lot of black market, and I don't know how to analyze it. But if you take Alberta, for example, we think that's a $600 million to $1 billion annual recreational market. Pretty large market. Well, they're having 250 retail stores first year. So 600 million divided by 250, that's 2.4 million per store. And we think stores with good locations, better branding, obviously branding is a tough issue right now, and more through traffic, they can have way more success. And if you look at the States, some of these stores are making 15 to 40% cash flow margin. So there's greater opportunities in the space. And I think I have a few examples later in my presentation, but that's just the start. And then you look at data analytics, look at Lyft, look at Matei. There's companies coming up everywhere that are growing rapidly, and that's what we want to offer is diversification. So we're trying not to reinvent the wheel. I think as an investor in the space, I spoke at Lyft in January, and I had 150 companies reach out to me after approximately just about, and we found one we really liked after that out of 150. And the reason is because they're in their early innings. They're not bad people, or they're great entrepreneurs, but they just have an idea. And I think for this space, what we're trying to do is find a good management team that has current revenue today, that has product traction, that has a relationship with an LP, and has a management team that can scale it from maybe a few $100,000 or a few $1 million to a multi-million-dollar business. And that's what we're trying to find in this space today. So I joke, actually, this is interesting. Michael came and said the growth of cannabis on the TSX, but I had 16 companies on my watch list a year ago that were public. Now there's 333 global companies on my watch list that are directly or indirectly involved in cannabis today. Just to give you an idea of how rapidly that's expanding, not just in Canada, but around the world. So this is an example. I think this is CanTrust. There's many great examples in this. I thought I'd highlight one of them. But as an investor in the space, I think corporate governance and a few things are important. As Michael said, doing due diligence on the management team is important. And what you have is you have a lot of new management teams that are managing multi-$100-million companies that don't have long-term public experience. Maybe they have business experience, et cetera, and maybe not on your exchange. Maybe it's on the CSE. There's a lot of management teams that don't have experience, and it's apparent. And there's a lot of boards that don't have the proper corporate governance policies. And I think it's important to watch out, because that's one of my biggest worry as an investor in the space, is that we're going to be let down by just a scandal. And that's what keeps me up at night, because I do see the growth. But that's something to keep to think about. CanTrust is just an example. CanTrust has 68% oil revenue today. So they're getting $12 to $13 per gram for their oil. They have one of the only pharmaceutical relationships in the space with Apotex. And if you actually look at their grams per square foot, their actually production, they yield a lot more than their competitors. And they have an experienced management team. I do think they have those corporate governance policy, and they have a path to international. And I think this is just to highlight a few of the different things. I think low-cost production is going to be important. I'd love to walk you through all these, but these are the criteria we look at for the licensed producers. So I kind of wanted to walk you through this is just a quick slide just to kind of give you an idea of where the demand's going. So if you look at demand, you can kind of see where it's going to be. Again, from a retail standpoint and an investment standpoint that we're talking today, private retail is only happening in BC, Alberta, Saskatchewan, Manitoba, the Yukon, and Newfoundland and Labrador. That's the only places you can get. And if you look at the market sizes, it's pretty tough in Manitoba. There's already 4 licenses announced right now. Haiku has one of those, National Access Cannabis. There's a few that you can trade with today, but from a private retail and investment standpoint, Alberta and Saskatchewan we like the best, and maybe a few places in BC for that demand. So this is important. I think we've talked a lot about cultivation, and in the news, everyone says, oh, I'm building a 1.2 million square foot facility. I see that almost every day. It feels like everyone's building a new facility every day. I think that what's going to be important is not cultivation, but distribution. We're going to be undersupplied for 2 to 3 years, but my team just went through all the different funded grow-ups today, and we add up that there's 2 million kilograms, 2 million kilograms in capacity funded today. That's already raised money building. And if you look at this chart all the way back here, what we are forecasting is 700,000 kilograms if you look at the top of this chart. And maybe it's a million kilograms, but that's double the current capacity that we will need. And it'll take 2 to 3 years to build that, so we will be undersupplied for a few years. But producers and everyone has to keep in mind, there will be a time that we are in significant overcapacity today. And I think the guys that will survive and what companies need is these distribution agreements today to actually get that in so that they have the shelf space. How do you compete for shelf space? And that's the most important question as an investor you have to ask these licensed producers today. Hydropothecary is an example. It's a Quebec producer. They just landed a contract that's almost 200,000 kilograms over the next 5 years. And it's probably at an average price of around $4.4. So that's $880 million, or just about, that they're going to get over the next 5 years, almost $1 billion. Well, they already have that contract in place, and there's people like Canopy that have the second biggest distribution in for the first year with 25,000 kilograms. I think that's what you have to start analyzing as an investor today, because there will be oversupply at some point, there will be pricing pressure, and you're going to need shelf space. So this is an example. The next question is, Michael kind of put it, I think it was 23 billion is the market cap for just Toronto Stock Exchange companies. How do you have 23 billion in market capitalization and $500 million in revenue in this industry? Right? I mean, that's a question you have to ask yourself. And as much as the recreational market is large, and there is a few producers in front, I think what's important to ask is, where's your value? And this is an example of a top 5 LP, and I'm not saying the top 5 LPs are bad. In retrospect, we own a big portion of the top 5 LPs because they're leaders. I'm just saying there's value in investing, and you have to be smart with where you're investing. And if you look at Hydropothecary, for this particular example, trades at 0.25% of the valuation of this top 5 LP, but it has actually more funded capacity today. And it has those distribution agreements. And I think as an investor, there are opportunities. Yes, everything's ahead of itself today, where it should be. Whether it's baking in 30% of its peak market, 40% of its peak market. If you're a long-term shareholder, we still believe that there's plenty of opportunities. You just got to be more strategic with your money. And I'm getting to the end here. I see the time. I think I have 4 minutes left. 5 minutes left? Okay. But I wanted to give you an example. Like, this space is so rapid, and Matej kind of gave you an example of a great ancillary business in the space. But there's so many different businesses that I didn't even realize when I was getting myself into this and being the cannabis investor. I didn't realize how diverse it was. And this is a company we closed on our portfolio. It's an IP company. So if you think about cannabis today, if you take a oil or a pill, patients have to actually wait 30 minutes to 2 hours for onset. So that becomes dangerous in a recreational market, where if you have half a brownie and then you're like, I don't feel anything, and then you have the rest, and you can kind of get in some funny situations there. But this company is a company that has figured out how to increase onset to 5 to 10 minutes. And if you look at Corona Brewer coming in the space, Constellation Brands and other brewers, they want water-soluble drinks. The reason Constellation came in the space was to actually make a non-alcoholic cannabis-infused drink. They want it some days, 5 years down the road, you're going to be at the bar, and instead of having a beer, maybe you order a cannabis-infused drink. And that's what they see, and that's the opportunity. And this company actually can create water solubility at any temperature. And they can even put it in an IV. There's no taste. And what we liked about this company, it was a company that is purely an IP company. They don't actually touch the plant. And they're in the one state they operated in, they actually launched 3 products with a partner. They spent $15,000 in marketing, and within 6 months, each product was #1 in their category. just because of the user experience, because that 5 to 10 minutes is great for user experience. So this is a company we're still finding today, and if you look at some of the other public, the Nanoleaf was taken out for $40.1 million. There's other companies in the space, public companies, the other two are Public, Nanosphere, and Luxaria that can do this, and they're great companies, but there's research you can find for companies that maybe do way more at a discount. This is one of my favorite ones that we close on in the fund. So this is, I'm almost done here. This is kind of the last slide I wanted to talk about. And the reason we created this investment fund was, again, our clients were already investing in the space. And who's invested in the space today? So most people in the room are invested in the space, and the same thing is with our clients. And what we wanted to do is create a fund that actually had a diversified portfolio with lower volatility, and we thought we could create better returns within the space. And this is a great example. This is the Canadian greenscape, they call it, but it's really a sample size of the industry. But you can see how diverse that is. What I will say is that 85% of these companies are private today. So if you don't have access to that private market, you don't have access to a lot of diversification. And the other thing I'll say is that less than 5% of these companies are covered by analysts. So it's really tough to find research, and I think you have to be aware of that as an investor, and you have to do your own due diligence. And that's really the reason we created our investment process, to give that diversification as a fund today. And that's it. I will say that I do write a monthly blog. If you guys do want it, I think I do give some great industry updates. I gave one on the Senate and kind of the analysis there. But if you are interested, I'll just leave this on the screen. And I don't know if we have time for a few questions. And yeah. We've done good. So we're in the money raising process for there's two things, I guess. The cannabis fund, we just started raising December 31st. We're raising until July 1st, and we're doing a monthly close. So we've closed on 4 private companies in that process, started investing. We're 30% publics, 30% privates today as we've been raising. I think we're up 5% year to date in that fund. But if you're looking at as a due diligence segment, we've been running a public portfolio for over a year. And if you look in the last 6 months, as of March 31st, we almost tripled the performance of the ETF in this page, the HMMJ. So I think we do have a core competency. I don't think that's something that, if you just analyze these companies and look at the good management teams and you look at who's been successful in the last couple months, I don't think it's rocket science to do so, but we did do the due diligence. So, yeah.
There's going to be, I think, in the legislation allow homes to allow like 4 plants each or something like that. Right?
Yeah.
How will that affect the market?
Yeah, I think it's a really good question. So did everyone hear the question, though? The question was, they're going to allow 4 plants each to grow cannabis and actually to do it yourself, whether it's recreationally or medicinally. I think there will be a marketplace for that. I think it's a great market. If you look at the home grow market in general, there's going to be there. What I will say is I don't think it's broad-based. I don't see a lot of people brewing their own beer, making their own wine. I think people will do it. I think it'll be a big market. But the bigger market, I think, will be the ones that you actually go to the store and if you're on the medicinal side, you want to go to a pill for Shoppers Drug Mart down the road and say, I want pain, and you're not even going to know you're going to get a cannabis pill. Or if you're a recreational user, you're going to want to and say, how do you want to experience your cannabis today? So I don't think it's the largest portion of the market, but it will be there.
One more.
Okay, one more question here.
Discussion are you hearing about in terms of the edibles?
Yeah, I think that it's early to say. There's been plenty of debates on it. It'll be within a year after legalization, whatever that date is. And I think the thing to watch for is that Canada, we've kind of made regulations pretty tight, and we're slowly allowing it open from there. And I think the same thing will happen in edibles. If you look at Colorado, they kind of opened everything at once, and they're like, okay, gummy bears, everything, you're ready to go. But if you look at what we're doing, we're probably not going to be there. I don't know if we're going to have all things at once. I think it's going to be a more gradual approach, and they're taking a very, I would say, conservative approach. So I would look for a year after you're going to see some things, and then a gradual from there. And I think that's my last question, but you guys can come talk to me after. I'd be happy to discuss. Thank you.